Hi, everybody. This is Gary Dean, and this is our nightly video report for Tuesday, January 19th, 2016. I'm actually getting this out about an hour before the market closes because I'm actually going to pick up a new car, and as much as that may take anywhere from 45 minutes, it could take 3-4 hours. So I figured before I go there, I wanted to get it out because right now what we're seeing, we're still trading within this bearish rising wedge. We still have the bullish divergences. We're still in a support zone, and what happens is we saw a nice run today. They gave it all back, and we haven't taken out these lows, and we've seen bottoms like this form, and I'm still believe we're closer to some type of low than we are, a crash, and really what the bulls have to do is get it through first the moving average that's at the 1912, and then that should give us an easy shot up to the 1934, 1950 area. And if it can get through that, then we're looking at a move to come up somewhere into the 1990 area. Now, if you remember on I showed you this last night where I said, we could be making some type of inverted head and shoulders pattern. It's not your best shaping pattern, but the thing is, it's still could be forming where this is kind of a deformed looking right shoulder. But in any case, I was saying we could get a dip, and then we should get a rally off of that. So right now, again, the first line in the sand that if the bulls can push through it, it's going to mean that they're going to try higher, and that's going to be right around that 1880. So if they get through to 1880, then the next stop is going to be this 1912, and you can also see the moving average 1916. So above here, we should get a move somewhere up into these levels here, and if they get above that, then we're looking, with the 5 waves, a typical retracement is anywhere from 50 to 62%. So 1970 to 1996 would be a typical target. And that's one of the reasons why, I picked up the SSO today. Now, if we can continue lower tomorrow, then I'm going to just turn around and buy a little bit more. But when you have using the SSO, it makes things a little bit easier to manage, because once we get into that second position, I can put in a hard stop and say, okay, here, we're going to lose a couple $100 or whatever if we get stopped out. But when you trade with options, the issue that I've had was, if you're not perfect on those prices, then you're looking at, your time decay, and you can be, instead of being down a couple $100 where the S&P is at the same exact spot, you can be down 50, 60% of your actual position. So the reason why I'm doing the SSO is just a little bit easier to manage on my end. And like I said, you can continue to try the options, but for me, it's just easier to relay a message using that. So really, right now, we're still really, really oversold on the 60-minute chart here. We're hovering here. I believe that they are trying to make some type of bottom, whether this is it or not. If it's not, then I'm going to be looking to pick up the second half of the SSO. And I still, just based off of our Elliott wave counts and divergences and everything else, I believe the next move should come. Let's just make it low and say anywhere between the 1943 and honestly, it could go to 2033 and still be bearish, because that would be a typical retracement. So right now, like I said, I whether the low is in or not, we'll see. The markets are, they're on shaky grounds. There's no way to deny that. But we do know when, we haven't seen anything stick yet. When one of those short covering rallies, kicks in, we see a lot of points made up real fast. But the bulls haven't had, they really haven't been able to get anything to follow through. I do believe it's closer than we think. Let's see what plays out. And like I said, if it moves down tomorrow, then I am going to be looking to to buy that dip again. So with that, have a great night, and I will talk to you guys tomorrow.